Alright, what's going on, guys? Back at it again for another video. I'm feeling pretty much back to normal now, so gonna start pumping these videos out, finish the series off, and then fill in the blanks where need be. Last part we left off at was we kind of finished off with volume. Really just tried to simplify it as much as I could, and then I kind of talked about what we're gonna be looking at going forward. I really talked about looking at a lot of setups, like perfect setups relative to the strategy. But one thing I want to dive back into just one more time is kind of the idea of finding the hot sector, finding the relative strength. So as you can see on my screen here, I have the sectors of S&P with some other ones that aren't exactly on the S&P, but as you can see here, we have like software, industrials, finance, energy, blah 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 blah, etc. 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 all the way down. And why is this? Well, it's quick for me to be able to go through and analyze which sectors are performing the strongest. What are setting up for breakouts? Are we above the moving averages and about a breakout of resistance? Is there volume supporting us? Do we have low volume pullbacks, etc.? You understand the gist of it at this point. Basically, are we trending above the moving averages, and do we have volume supporting us through these breakouts of resistance? So with that being said, we can identify the hot sectors pretty easily. Now, one thing we want to do is also identify if the market itself is in a trending manner. Are we below the 50, 10, 20, or are we above the 10, 20, 50? Right now we're currently below, so we'd be looking to short a lot of the relatively weak names, the relatively weak sectors. So names that are in IGV, names that are in XLK, ones that are trending below the 10, the 20, and the 50. Should be relatively easy to understand at this point. Furthermore, when we're below, so let me pull back up S&P. When we're below, that's also going to, when we're below the 50, 10, and 20 on the S&P, that's also going to cause some rotation into defensive type sectors. So ones that we were looking at before, we had healthcare, materials, etc. Finance was looking pretty hot. You guys get the idea. Kind of analyze this yourself. What sectors are defensive, and how can we make our monies worthwhile when the market is not necessarily in the best and or most productive spot? If we are going to be quote unquote forced to trade, or you feel like you have to trade rather than stay in cash, then that's how you figure it out. You target either the weakest sectors and you target downside, or you target the strongest sectors in terms of defensive rotation. Now furthermore, one thing I wanted to show y'all is if you're not necessarily lazy, but if you want to just go through really quickly and look at what sectors are the weakest, what sectors are the strongest relative to each other in recent time, you just go on Finviz.com, you click on the groups tab right here, and you can see in the bottom here the weakest in the last month. That's kind of more so the only relative time period besides the last week. Look at the weakest here, those are the ones you'd want to short. Look at the strongest here, those are the ones you want to long. And you can just look at the 1 month performance, the 1 week performance, see if it's keeping steady, and then target those sectors. Now keep in mind, we're only going to be targeting those sectors and individual stocks within each when we have a dominant trend. So when we're between the 10, actually let me just rewind here. When we're between the 10 and 20, so there's nothing for us to do, like right here, there's no indicative trend, well then we're not going to do anything at all. So when we're kind of floating in this no man's land here, this area between the 10, 20, and the 50, there's nothing for us to really do. And when you see the market kind of shuffling around, throwing wicks into these areas, rejecting but still going up and slightly coming back down, essentially just creating a consolidation with no major trend or minor trend, and that's when you go and take a break and take a vacation and come back when there is a dominant trend. A lot easier in terms of profitability and finding a trend following setup. So I just want to put that out there quick. That is how we do that. And now I think I want to dive back into what is our ideal setup. Before I dive into all of the examples and stuff, I think it'd be more important to really just establish the strategy itself and kind of just figure out what we're truly looking for when I show the examples, and so hopefully they stick out like sore thumbs. So I'll pull up the most recent one. Okay, so this is the most recent valid trading setup that I found, in which we were in a kind of no trading zone. 1 second. Just want to tie my hair up really quick. It's kind of bothering me. But one thing that we're looking for here is PEG setups, PEG, power earnings gaps, post earning gap. And the most important part of all of this is the power, and when there's power, there's also weakness. So, how do we figure this out? Well, first off, it's called the power earning setup, so we need, get this out of my face. Okay, it doesn't want me, there we go. We need a powerful earnings. So what do we see here? We see straight up candles breaking through prior resistance or supply, kind of creating local highs. And what do you know? We have great volume falling through with such, breaking above all of the key moving averages, 10, 20, 50, even 200 here in this case. And therefore, we're kind of like at this local consolidation high, or pivot high, you could say. We made the new local pivot high. Now, obviously, we're not going to be able to get in on this right here. We've talked about this before. But what does this allow us to do? It allows us to get the setup so we can wait for the pullback to the 10 EMA. Now, most importantly, why was this a valid setup? Yeah, we got the power earnings gap, it gapped up. We got the low volume pullback into the 10. And we got this kind of, I don't know if I've talked about this before, but this is what I refer to as the quote-unquote God candle. When you kind of create a day close or end of day closing above the previous candle high, and it's nice and tight, and you kind of wick down and drew the liquidity up from here. Buyers came in and they held above the previous day high. Beautiful kind of candle, like when there's a breakout that's going to be imminent. It's pretty responsive. Now, excuse me. This isn't always going to work. You can just do this on every single setup. Why? Because not all sectors are going to be receiving inflow. Not all sectors are going to be strong in terms of a weak market. And they're not even going to necessarily be strong in terms of a strong market. So it's important to understand what sectors you're trading. In this case, it was XLV, healthcare. And where were we in terms of healthcare? Excuse me. We just broke out of recent consolidation, and we were retesting this kind of multiple time pivot high resistance turned into support. So we were in a positive outlook for sector, and when you are in a downtrend on the overall market indices, where's the inflow into defensive names? So you see healthcare pop out, and so what do you know? You go target an individual stock on healthcare that just had a power earnings gap. So you draw into the low volume pullback, you wait for it to get close to the 10. If it doesn't touch, well, do we have a God candle? Do we have an inside day that's relatively high volume? Are we getting slow trailing candles with not a lot of resistance, low volume, pull back into the 10? Then okay, it's looking like we're gonna be good to enter. Geez. So that's one setup, and I'm not gonna go over all of these in terms of right now, but I can show you another setup. I don't want to completely throw all of the strategy setups at you right now because I think it's important for us to digest them first before kind of just throwing everything at you at once. Okay, so next thing I want to go over is this kind of retake, quote-unquote, setup, I guess you could say. As you can see here, another PEG, power earnings gap, peg. I'm going to refer to it as peg from now on. So you see another peg setup here, big earnings gap up. Obviously, we're not going to be able to enter here, as I've said multiple times before, but what does this allow us to do? It allows us to look for a low volume pullback to the 10. Now, the reason why this one was kind of not necessarily as good of a setup as this, it didn't have like the quote-unquote God candles immediately. It wasn't smooth flowing straight to the upside with this great volume through even the 200 in this case, is because we never even necessarily broke the recent pivot highs. As you can see, we destroyed these pivot highs. If I stretch this out on UNH over here, we broke right through the pivot highs and we're kind of retesting them from above. If I were to do this, we essentially just bounce right off of it. So in this case, we couldn't do that. So I wouldn't label this an A+ setup, but I would say it's pretty damn good. Now why is this? We broke above the 10, the 20, and the 50, and we did it with the peg high volume, kind of not necessarily pure buying candles, but there were buyers, and we were breaking above the key moving averages with volume. Now obviously there's nothing we can really do here in terms of setups, kind of like trend following, but when we get this low volume pullback here, yeah, you can target this kind of initial 10 touch, but I think there's a bigger idea here for us to kind of absorb, and this is how I got into this one. So we have this kind of simple, I don't know, I'm not one to follow chart patterns, but it's just really easy to see in terms of this case. We break above recent pivot high, so it'd be right here. We break above this recent pivot high. This is our local high in terms of when we were trading over here. So this is where a lot of sellers are going to be. We break above, and you can see obviously sellers come in. We draw the liquidity, so you can imagine that there's a lot of sellers here. And let's say there's this many orders at this current location. When we tag into the spot, especially close to the 200, a lot of orders are going to be pre-filled. So when we tag into it, the selling orders are going to activate, and we eliminate some of those orders. Now, when we kind of consolidate downwards, we're not necessarily getting any real trending volume. We're kind of just pulling back on more so nothingness. But the sellers are getting liquidated within this area. As you can see, we're kind of wicking into it. It's above this recent local pivot high. We just kind of keep like jabbing it, jab, 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 1, 1, 1. And then eventually we come around to this point where we get this God candle kind of set up, and we break out of this little bull flag here. I really hate saying that word. But we break out of this little bull flag here, and what do you know, it puts us in a nice super low volume kind of consolidation right after this God candle. And what does that mean? It means that the sellers aren't necessarily sitting at this local kind of high within here. So where's the next spot for us to go? It's at least up here to this kind of 500 area. So that was my initial target, with the next target being 200 MA, and you can kind of follow the 10 EMA on the next wave up. Now obviously there's a gap fill, so you're not necessarily it's not necessarily the best setup to keep trending afterwards, and you also have a recent pivot high, 5 more above. But that was kind of the idea of drawing liquidity, oh my god, drawing liquidity from these recent pivot high setups, getting these low volume pullbacks into the moving averages, getting the God candle into a kind of low volume breakout, showing that the sellers aren't there anymore, and you can get a nice trend upwards. So hopefully that made a little bit of sense. Obviously this is a harder setup to analyze, and I would not suggest even taking anything like this. For quite a while, you need a good bit of screen time to be able to analyze such, but I figured I'd explain it. Now this is something that's very simple and easy to understand. You break out of overall weekly pivot highs, you come back, retest that on super low volume, as well as the 10. Obviously I didn't enter here, but after you get the God candle indicating that sellers aren't necessarily here anymore, and with us retesting this kind of pivot area off these wicks, and only rejecting just to stay within the or above yesterday's close, or yesterday's high, I'm sorry. That's really bullish, so that was a clear indication to enter in on that, and then keep going, especially with the S&P kind of falling. It was pretty standoutish that those healthcare defensive type of names were going to be getting inflow. So that's just kind of two setups in relation to the peg setup. One that's a little bit harder to execute, and then one that is quite literally almost perfect. So yeah, that's just the peg setup as a whole. Kind of talking about pivot highs, drawing liquidity, and I have a feeling this is my first time introducing the God candle. But yeah, the God candle, kind of the draw on liquidity, how the moving averages help us out, recent pivot highs, and how to look out for the peg in terms of waiting for the pullback. So yeah, hopefully this helps. It's going to be kind of like the first main setup that y'all will begin to understand. And remember, it's only going to work if you're targeting key sectors during key times, and individual names within each. So yeah. So hopefully this makes sense. This is kind of the first setup, and going over how to find groups and or relative strength within the sectors, and what time to target each, and how to find them. So hopefully this makes sense for the peg setup. Pretty basic, and yeah, we'll be diving into the next one soon. Hope you all enjoyed this, and if you have any questions, please let me know in the comments below. Peace out.